A record close for the market led by Reliance and IT. Nifty ends above 22,000 for the first time. Market cap of listed companies at record high of 376 lakh crore rupees.
IT stocks continue to rally after the top four companies largely beat muted expectations in quarter three. Wipro leads the rally after the CEO promises stable growth.
Tata Consumer Products acquires Capital Foods and Organic India for 7,000 crore rupees. CEO Sunil D'Souza says Capital Food revenue could grow in double digits, while Organic India could grow multi-fold from current levels.
Hello and welcome to Markets Forward, the show where we aim to get you set with all the key data points for the next trading session. I'm Nigel D'Souza, joining me, my colleague Surbhi Upadhyay. Hey Surbhi.
Hi Nigel. Well, what a start to the week. Bulls in absolute control, and we're going to talk about that and a lot more as we go forward. We have you completely covered over the next 20 minutes, all the big developments of the day, the key news points, and all the top corporate voices that you need to watch out for. Plus, of course, we prepare you for tomorrow, so all the top events to track as well. But we'll start off by recapping what a strong session we've had. Not just 22,000, 22,100 in one go.
Absolutely, Surbhi. You know, things are looking good. It explains to you when you have that cricketing team that comes out to bat and you have the openers and you have the one down that are all performing.
Yeah.
The IT index, the Nifty Bank, as well as Reliance Industries, all of them are in cracking form. And when that's the case, it pushes the Nifty higher. So that's pretty good news. And if you look at it in the last 1 week or so, we keep talking about the two large indices, that's the IT as well as the Nifty Bank. Well, Reliance Industries has been the big outperformer. And it particularly comes to the party post-lunch. In the second half of trade, we've seen Reliance Industries comes to the party. And we just pull up a dual chart of Reliance Industries as well as the Nifty. Well, that'll tell you the picture. It's been a big outperformer. Just one word of caution. The Nifty moved up. For the second day running, you had the India VIX as well that moved up. Sometimes that braces you for a bit of a pullback. Not to say we're going to get a large one, but maybe in the next 3 or 4 sessions, I won't be surprised if we pull back a little bit. So for the time being, the bulls, they have the momentum. Normally, when you have the Nifty moving up, you have the inverse relation with the India VIX, which cools down normally. So we'll keep an eye out on that. And today, the cat is away, so the mice were at play, right? You don't have any shocker coming in from the US markets later tonight.
Yeah.
So the bulls, they took control of that, and domestic money as well would have been coming in as well. And that's what helped the Nifty. The final tick on the Nifty was at the day's high.
Yep.
The big cue for me tomorrow, HDFC Bank comes out with its set of numbers. The Nifty Bank has been a relative underperformer. HDFC Bank has not been a big outperformer. So commentary as well as results, that's the big trigger.
Absolutely, and right now the market's in a bit of a no-worry zone because of the kind of money that's been pouring in on a daily basis. The last print that we had was, over 2,000 crores coming in from domestic institutions. So even as foreigners have been kind of sitting on the edge, we haven't had a very steady flow of foreign money in the last couple of sessions. It's domestic buying all the way that is taking this market higher. So let's wait and see how those numbers shape up. As Nigel mentioned, we've already got sort of 3 engines firing now. We were always complaining about banks not performing. That's changed in the last couple of sessions. And the Bank Nifty had another good run. With HDFC Bank, the one that will report numbers tomorrow, that was the big leader. It had other stocks for company, and we'll get to that list in just a bit. On the broader side of the market, it wasn't too bad. We had a 1:1 even-Steven advance decline ratio, though the mid-cap index per se was maybe just a shade behind the Nifty. But it was good gains all throughout. And PSU stocks, once again, that massive move in PSUs is back today. A lot of railway stocks were on fire. We'll have Horma tell us more about that. Finally, I mean, in terms of the major cues, the market has clearly had a breakout, and today establishes that breakout. Chances are that the bulls will, likely retain control, at least till we start getting more global cues, which is not happening tonight. So let's quickly get started and tell you what all we are covering over the next 20-odd minutes. We'll start off with the top movers of the day with Hormaz. Now, IT stocks have been in focus after tech companies came out with their numbers, and Wipro and HCLTech also were very well received. The stocks did really well today. So we will get you, of course, all that analysis. Tata Consumer made headlines as it acquired Capital Foods and Organic India. We will tell you more about all of these stocks as we go on. Last but not the least, of course, we'll talk about the key events to watch out for tomorrow, earnings and beyond. But to begin with, as promised, let's get to our segments of top movers and shakers. Hormaz, a day on the green side once again.
It's become a regular occurrence now, hasn't it? The day on the green side, we gotten used to saying this. The market is steaming ahead, but what is also steaming ahead are railway stocks, and there is no stopping them whatsoever. And the moment you hear of railway stocks, the first stock that comes to mind is IRFC. It's now up 5x from its IPO price of 26 rupees. It was another record high today. IRCON, RVNL, RailTel, IRCTC, you name them and they were up. All of them did well today. Fantastic session yet again for the railway stocks. But what was also in the pink of health today was pharma. Along with IT, the pharma stocks also did very well today. And Glenmark, Aurobindo, Alembic Pharma was up almost 8%. Biocon and Glenmark Life did well. You spoke about PSUs briefly. PSUs continue to move higher. Just like the market, the PSUs has become a regular occurrence as well. SJVN, another record high today. BHEL continues to remain around that 200 rupee mark after that 15,000 crore order win from NLC. Oil India, NHPC and REC were some of the others that did well today. But the standout PSU though is ONGC. The stock has been up almost 10% over the last two sessions. It is trading at the highest level since March of 2015. So it's almost a 9-year high for ONGC. But what is slowly catching up is LIC. And that stock is now very close to its listing day price of 867. But what is also key to note is that LIC is nearing State Bank of India in terms of its market cap, where State Bank of India close to at around quarter to 6 lakh crores in market cap. LIC is nearing 5.5 lakh crore. What also did well today was Paytm, and the December quarter shareholding data showed that mutual funds now own 5% stake in Paytm, the most that they have ever owned since listing, around 3% higher there on Paytm. And lastly, Dixon Tech, a stock that did not do well today. Goldman Sachs downgraded the stock to a sell, and it cited three major reasons for it, and they are projecting a downside of around 17% on Dixon Technologies. Back to you.
Thank you, Hormas, for joining in. Always on the ball with all those stocks that are moving around. Well, let's get straight to our guests then who are joining on the show. Nagaraj Shetti of HDFC Securities, as well as independent market expert Ambareesh Baliga joins us on the show. Hi, gentlemen, and thanks so much for joining in. Well, Nagaraj, you go first. This market just wants to move up, right? I mean, on a day-to-day basis, you're seeing it move up. In the middle, you had a bit of a consolidation phase, and everyone said, we're going to see consolidation. The market's not listening. What are the levels you're looking at?
Yes, hi, good afternoon. Nifty has been in a sharp uptrend in the last couple of sessions, that too, especially after the decisive upside breakout of the range moment at 21,850 levels on Friday. And the overall trend remains positive. And the higher levels, I'm expecting 22,200 to 22,300 is going to be a hurdle for the market as per the long-term Fibonacci extension. And at the same time, if Nifty breaks above that level, we could see a further highs around something around 22,800 levels is also possible, provided it decisively breaks above 22,200 to 300 levels. And this is going to be the initial target for the Nifty.
Okay, all right. Thanks for that, Nagaraj. Ambareesh, I wanted to ask you about one stock. If I remember correctly, IRFC is a stock that we had discussed in the past. You could correct me, but I think it was a third or a fourth of the current price. There's a lot of hope with regard to the railways. Time to take money off the table now?
I think so, because see, I mean, about 18 months back, I mean, post the IPO, this stock had done quite badly in the sense it was always below the IPO price. It had gone to levels of about 18, 19. At about 20 to 25 levels, I was recommending it for a couple of months, and absolutely there was no interest in that stock. Although it was an excellent dividend play at that point of time, if you look at the consistency of profits, that was excellent. NPAs, I mean, were zero and will continue to remain zero. But that's not the reason for the stock to go up by about, what, 6x? It's more than 6x now. I mean, at that point of time, although I'd given a price target of 36, I mean, the most I could stretch was possibly 50 in about 2 to 3 years. And this, within 18 months, we are seeing levels of about 130. I think it's just gone crazy. Because if you look at the business model, nothing has changed in the last 12 months. Profitability remains more or less the same. It is sort of flat. I mean, we are not even seeing a 25% growth. Forget about 30-50% growth. We are not even looking at 25% growth. And even this quarter, I think, will be more or less sort of a stable, maybe 15-20% sort of a growth this quarter. I mean, you can't justify these levels, but markets are crazy right now. And like there is momentum, the stock can go up more. But then one can always take a stand. And the stand which I'm taking right now is remain on the sidelines.
Okay, all right. That is IRFC. Been quite a breathtaker of a stock. All right. Stay on, Ambareesh. We'll have more questions for you. Let's discuss some of the key stocks that were in the limelight today, that were in the thick of action. Starting off with IT, the big four of Indian IT have come out beating muted expectations in the third quarter. HCLTech led the pack with 6% revenue growth, that is quarter on quarter, while for Wipro it was a steady quarter as well. Both of those stocks ended positive today, and they took some of their peers up with them as well. Let's go across to Rima for all the highlights. So, Rima, I guess the street really loved whatever they saw, keeping expectations low in Q3.
Absolutely. There were no negative surprises. In fact, it was a stable quarter, and Wipro was one of the big movers today, a rally of close to about 6% as it beats muted expectation. The company is also given an indication which perhaps suggests things will be improving. One, they had a high dependence in the consulting business because of the Capco acquisition. And here the company said that they are seeing a double-digit increase in the order booking for the Capco business. And two, the management also indicated they're seeing green shoots in the discretionary spending. The stock, though, ended from the day's high because brokerages don't seem to be very convinced. Kotak says Wipro has beaten estimates, but it's still not in a good spot. Bernstein says despite the growth underperformance over the last few years, valuations are above a 5-year average. And Nomura says that after the revenues fall by 3.2% this year in FY24, it will only grow to 1.8% in FY25. So the recovery will be fairly feeble. HCLTech is the one which was a big beat on both revenues and margins. The top line revenue growth came in at 6%, margins expanded by 130 basis points, and growth for the company is again at higher than peers at a 6% growth. Again, not everyone's convinced. CLSA today downgraded HCLTech to an underperform. They believe it was the bunching up of multiple catalysts that led to a strong beat, and they see a weak sequential growth for the company in Q4 FY24 and Q1 of FY25. Back to you.
All right, Rima, thank you very much. Yeah, indeed, I mean, lots of brokers also questioning. HCLTech, despite a superb quarter, has narrowed down its guidance a little bit. So, can such heady performance continue? I guess that's the question. Thank you for all the details there. Let's move to the other stock that was catching the limelight today, and that's from the consumer space. Tata Consumer was in focus. The company has announced 2 acquisitions. This is Capital Foods, the makers of Ching's, the popular brand that we all know, as well as Organic India, a brand that originally belonged to Fab India. Mangalam is here. Mangalam, lackluster on the stock, but what's the view on the street?
Well, the street likes these acquisitions. Lackluster view on the stock largely because of the massive run-up that we've seen on Tata Consumer already. Today's move notwithstanding, the stock has seen double-digit gains in the last few trading sessions at a record high and trading at valuations of nearly 50-55 times 2-year forward EV to EBITDA itself. But these acquisitions itself, they will be one, value accretive, secondly, revenue accretive, and thirdly, most importantly, margin accretive as well. So let's put the details here. 5,100 crores is what they pay Capital Foods for, and the other one is 1,900 crores for Organic India. Roughly, they pay 7,000 crore rupees. What do they get in return? Capital Foods revenue 750 to 770 crores with 20% plus margins. Organic India 360 to 370 crores revenue with 17 to 18% margin. So roughly for 7,000 crores that you're paying, you're getting 1,200 crores of revenue, margins of anywhere between 18 to 20 odd percent as well as is. That is valuation accretive, but importantly, the reach that these companies have are nearly 10 times less than what Tata Consumer has. Capital Foods reaches just 0.4 million stores. So we have Tata Consumer, which is 4 million stores itself. Organic India has 25,000 store access in India, whereas, Tata Consumer, again, 4 million. So you can scale the revenues. And at synergies, you can have nearly 30% margins coming in for Capital Foods itself. So all these factors weigh in terms of good growth for them. In fact, we spoke to the management, and this is exactly what they spoke as well. They said that these 2 acquisitions can create massive shareholder value, but importantly, can grow manifold and add to the margins of the company as well.
From a brand perspective, now with these 2 coming in, I have all the cuisines to appeal to the Indian consumer. The Sampan appeals to the Indian taste, Smith & Jones is Western, and Ching's Secret, I would say, right now it is mostly Desi Chinese, but can probably go Oriental. So I've covered the entire plethora of cuisines that an typical Indian would have, and that plays perfectly. Strategically made sense. I can say that we are going to grow aggressively on the top line. Define aggressive as high, strong, double-digit growth, right? And EBITDA would be significantly accretive to our portfolio. So we would see a significant increase in the EBITDA margins for ourselves. I would say significant change in the growth trajectory of TCPL with these brands and EBITDA accretive. 400 basis points from trade margin is a given because that we know the number from this thing. The integration team now will go to every single minute detail and then draw up the map. We do expect significant amount of synergies to come out, given that they were, as I said, they were operating subscale.
Well, the other stock in focus which was underperforming was HDFC Life. The stock was down close to around 4% on fresh brokerage calls post their earnings. Upasana joins us to fill us in with a quick review of those numbers. Upasana?
Well, HDFC Life has reported a weak Q3 FY24 and Investec has given a buy rating with the target price cut by almost 9% to 750 per share. It sees a weak near-term outlook, mainly driven by weak APE growth and proposed regulations on surrender values. It has downgraded the FY24 and FY25 APE estimates by almost 8%. It says that the weak growth was led by several factors like decline in high-ticket policies, flat yield curve impacting the demand for non-linked products, and HDFC Limited consciously curtailing the ULIP growth. Despite all these headwinds, VNB margins improved across the product categories is what the brokerages highlighted. Now, Morgan Stanley has given an outweight call with a target price of 780 per share. It says that the execution and manageable outcome on the regulatory proposals will be the key to watch out for. Now, HDFC Life in its Q3 FY24 con call has highlighted that the growth in Tier 2 and Tier 3 towns have been twice of the company's growth and has accounted for almost 65% of the company's overall top line. It is also aiming for 10% growth on Y-on-Y basis in Q4 FY24, and it says that protection growth will outpace the overall company's growth for the next 3 years. There can be a 20 to 25% growth in individual protection on a normalized basis is what the company has highlighted.
All right, Upasana, thank you very much for that. We still have Ambareesh with us. Ambareesh, share your thoughts with us on any of these stocks that we've discussed, specifically on Tata Consumer. One, as Mangalam said, the stock has anyway had a great run, some 50-55% up in the last 1 year. The second is also, the numbers. How much are you paying and how much are you immediately getting? So you're paying 7,000 crores. And as Mangalam pointed out, we are getting what I think 1,100 crores in revenue, roughly. So is that a concern, the price of the deal, or do you think it's just because the stock has already gone up so much?
I think that, it was a decent valuation. I don't think they're really overpaid. And there will be a gap from the takeover point to the start, the point where it starts really giving you those much higher revenues. But then, I believe it's a very good fit. Both these companies are good fit. Both these brands are, in fact, good fit. And there's a lot of synergy. And I believe going ahead, possibly we should see this in the next 12 to 15 months, that it will improve efficiencies for both these brands, because Tata Consumer has that complete chain from farm to fork, and because of which we will see that the efficiencies are much better, and it will really start showing up possibly in the next 15 months. So I think we'll have to wait a bit. So any sort of a correction in Tata Consumer should be utilized to buy.
Okay, all right. Nagaraj, what about you? What are the levels you're looking at Tata Consumer? The stock did run up ahead of that big deal, and then it opened up gap up, but then it did see some selling. On the charts, how's it looking?
Yeah, looking still positive. We have seen a tremendous up move from the 1,000 to 1,190 odd levels, and without showing any reasonable downward correction for the stock. I'm expecting around 1,200 levels. There is a possibility of the stock is reacting already today reacted from the higher levels. I'm expecting some more consolidation from the higher levels, and probably around 1,100 to 1,080 could be a support for the near term.
Okay, all right, gentlemen. Thank you very much for being with us on the show and giving us all of that perspective on the themes that we have discussed. You have a good evening. We'll take a quick break, come back on the other side, and then we get you all the important events and market triggers that you need to keep in mind for tomorrow. Welcome back. Let's now take a look at some of the top corporate views that we got today. And this is coming in from Hero Moto. We are quite optimistic on growth in 2024. That is the word coming in from Nilanjan Gupta, CEO of Hero Moto Corp. He told CNBC TV 18, this is, on the sidelines of the World Economic Forum at Davos, that the company expects its exports to double to 10% of revenue over the next 5 years, and also adds that he's expecting a recovery in rural demand. Take a look.
So let me talk about premium first in terms of, we are already seeing the results. You already seen 440cc Harley-Davidson X440.
Yeah.
We'll have another one which is 440 coming up very soon in this quarter itself. We shouldn't go by revenue contribution as of now because we just launched the products.
Yeah.
But if you go by, let's say, for instance, our capacities, our capacities of these 2 or 3, just the upper premium, and I had said this before, will be around 10,000 as a volumes per month.
So when we talk about scaling up, again, what is it that you expect in terms of contribution from exports to revenue in the short to medium term?
I think we are intending in the medium term to that they should occupy at least 10% of the revenue.
And what is it currently?
In terms of this one. Currently it's 5% of the revenue.
Okay. So,
and of course, the revenue itself will be growing.
Yeah. So a doubling on the export front over the next 2 to 3 years?
5 years, I would say.
5 years is what you expect.
Well, interesting chat out there. But before we wrap up, let's get you some key market events that you need to watch out for. Mangalam standing by to fill us in with all of that. Mangalam.
Big day of results for tomorrow. We have Big HDFC Bank reporting their numbers, so that's something we'll be keeping an eye out on. After many quarters of reporting it on a Saturday, it comes on a weekday, hopefully in the market hours as well. Federal Bank is the other one that we're looking at, and from the banking space, ICICI Bank too. But the other results, the non-banking ones, or other, the non-big bank ones, we have ICICI Securities, L&T Tech Services, MapMy India, Newgen Software. So all those stocks will also be in focus tomorrow. Post markets today, we'll get the numbers of Angel One. So tomorrow is an earnings call for that one. That's something that the street will keep an eye out on too. And there is a big listing, Jyoti CNC. The reason why I call it big is because 38.5 times subscribed. So after a big slew of IPOs that listed a couple of weeks ago, this is one that will list tomorrow. And Shalimar Paints today actually saw a near 20% move with 20 times average volume traded. So is there any bulk deal that may come reflected is something we'll be watching out for too.
Okay, all right, Mangalam, thank you very much for that. So those are all the key events to track tomorrow. For the time being, from the entire team that puts this show together, Nigel and myself will take your leave. Have a fabulous evening, but we will catch you bright and early with all the market action tomorrow morning.